My only rule with my wife is that we can fight on anything, but not money.
As you touch 70 and 80, money is your only friend.
It's the biggest ticking bomb of the country. Every country has a structured pension plan. India does not have one. Everything I've said is wrong. With all my wisdom, equity is the only growth asset class. I have learned my lesson very, very bitterly.
You have also said that there are many attractive businesses available at compelling valuation. So in this current market scenario, what are those attractive business opportunities?
I would definitely start building positions on innovation, energy, defense. India has to build a manufacturing hub.
If the market corrected, say 30% tomorrow, what would you do personally?
I'll buy more equity.
I read the book by Morgan Housel, and he said it's important to pick your lifestyle very carefully.
Yeah.
And it's important that you don't try to live one lifestyle while you try to inculcate another for your children.
There was this friend of mine who was finding it very difficult to tell his child that he had sold his house to provide for his foreign education.
Globally, we've seen a lot of capital flow to the AI-dominated sectors. It's been to Korea, it's been to the US, of course, majority. Will India catch up?
Every Korean is very clear that the country has to grow. In the stock market, if one or two companies only perform, there is concern. Why are others not performing? One of the largest trading lots in Bitcoin now are Indians. That's their risk profile. If you don't cater products to their risk profile, sooner or later they will hunt for it.
My guest today is someone who has seen Indian markets through every possible mood. Fear, euphoria, crashes, rallies, and everything in between. Swarup Mohanty is the Vice Chairman and CEO of Mirae Asset Investment Managers India and the first non-Korean to lead the business in India. What makes his story so incredible is where it began. His first salary in 1994 was just 3,200 rupees a month. Today, he oversees one of India's most respected asset management firms. In today's conversation, we talk about where the markets and India are headed next, whether the SIP revolution has permanently changed investing in this country, why he's paranoid about retirement, and why he believes that money has a lot more to do with happiness than people admit. And in this episode, we also talk about children and money, raising children around money, Gen Z, the silent financial habits that children pick up from their parents. I really hope you enjoy this episode. We've got so much to discuss, so let's get started. Swarup, thank you so much for being with us. Welcome to the show.
No, thank you, Avan. Thank you so much for having me. It's such a pleasure to be with you, and hopefully we should have a meaningful conversation.
Oh, we absolutely will. I want to structure this in understanding your view about the markets right now, your personal journey and, views on personal finance. And then we were going to talk about the very pertinent topic of children and money and raising children responsibly. So let's start off. When the world's largest economy sort of changes its behavior, the rest of the world follows. And you've said that while the war may stop, the impact of the war is here to stay.
Yeah.
What do you mean by that?
So much has changed, right? When I was young, I was told that life was before Christ and after Christ. Suddenly, I believed life was before COVID and after COVID.
Yeah.
But life now certainly is before the whole action of this war and after the war.
Yeah.
Look at what is happening in the war scenario. The larger country is not under control. It's the smaller countries which are ruling the war. It's up to when you look at the Russia-Ukraine, who would have given it 4.5 years of wartime between the might of the largeness of Russia? When you look at US versus Iran, who would have given a chance to Iran? But it's up to Iran to end the war, if I were to put it mildly. So when you look at that as a backdrop, even if it all stops, some of the damage or the implication, especially on supply chains, are here to stay. So make no mistake, the impact is probably perpetual.
But you've also said that markets always climb the wall of worry. So then why are we worried about the post-impact of the war?
Because the impact could be far-reaching. When you look at the whole issue about, say, let's be very specific. Let's talk about India ourselves. The risk that we have on export or import of oil is something which has come up pretty glaringly. And there's no alternative to that now. And you might say, okay, we'll increase the price a bit, and
they already have 4 times.
I don't think we have seen the end of it. But even if we increase the price, there's been a certain impact of it already. And none of that impact, whether it's from the sovereign or from the balance sheets, have been passed on to the consumer yet, right? That needs to be absorbed and then passed back at some point of time. So it's not something which will end in a hurry, or there is no quick fix to it. And hence I believe that the impact of this could be a little longer than what many of us are kind of thinking.
Okay. How long?
I mean, I said that the impact is permanent. Till we don't find a
Permanent.
solution to, or we should have started our work towards de-risking this import of oil already.
Okay.
And quite honestly, don't take me otherwise, I'm seeing no signs on it.
Okay.
When you compare the same situation to other countries, I think other countries have reacted far ahead of time than we have. Maybe we will, I'm sure we will. But till that does not come about, this impact might remain.
Okay, so there is a big risk, and you're saying permanent sort of damage has been done, and we will be, or the impact of it will
See,
play out over the long haul.
people absorb the impact.
Fair.
I'm not saying that the impact is something which is a permanent damage.
Okay.
Businesses have to be rejigged, balance sheets have to absorb this,
Okay.
and then come under a new frame of working is my simple point.
Fair. But you have also said that there are many attractive businesses available at compelling valuations, and that is what you're looking to build your portfolio with. So, in this current market scenario, what are those attractive business opportunities?
See, Avan, I have this simple theory, right? Like, while there is this great impact of global macros, India is like our great mango story. You should know that we are the largest mango growers of the world, or manufacturers or producers of the world. But we only export 1% of the incredible mangoes we produce. You know why? Because the rest we consume ourselves. So India is that story. 60-70% of our produce we consume. So we at times like this can remain very insulated from these global impacts, because we are not dependent so much like other economies on the rest of the globe. So in that way, there is a fair amount of shock absorption that can happen. And if you put that in perspective, then some brilliant businesses are available at some good prices at this point of time.
Do you want to tell us which sectors are
across
looking?
board? I mean,
Okay.
see, in such situations, from a portfolio construction perspective, in the near term, it's always wise to have a flight to safety, if I can put it mildly. And then when you have a flight to safety from a near term, one has to always focus on the core pillars of the economy. And when you look at that core pillars of the economy, I'm not a big fan of sectors. I'm a bigger fan of themes.
Yep.
When you look at those themes, then
Which themes?
see, the core of Indian stock market remains banking and financial.
Yeah.
And some brilliant banks are available at some good prices, right? And the prices which you are buying them at 2024-25, and the prices that are now, you be your own judge, right? But on the financial or the fintech side, there are some incredible businesses growing, and that's somewhere where, from a future perspective, one can have some good positions building. You can build it up over a period of time.
Okay.
We've always been big fans of consumption.
Yes.
And then this story of India moving from per capita 2,500 to 3,500 brings up this incredible change of that space. See, correct me if I'm wrong, in COVID, as individuals, we were the first, it's first time in my life that I could differentiate between what is a need and what is a want. It's first time. Otherwise, it was always a blur. We would confuse wants to be needs, right? That's where we could now start differentiating between what we call consumer staples, which are more towards the need, and consumer discretionary, which are more towards the want. As per capita grows, and when people start earning money, they tend to fulfill their fantasies more than often. So the story that will build in the next 5-10 years could be more on that space. So the consumption space stands re-rated as we speak, and will continue to re-rate. My personal favorite always remains healthcare. Always.
And energy transition.
Yeah, I was coming to that.
Yeah,
so this is the near term, right?
Okay.
But at the same time, you cannot keep your eye off the future. And when you look at the future, this whole space of innovation and energy is what will unfold.
Okay.
I would add defense to that, because post this whole thing, defense becomes a core of all nations. At a global level, 18 years ago, we had called out consumption as a structural theme. In the last 3-4 years, post this change of US, we've called out defense as a global theme. So, if I were to peek into the future a bit, I would definitely start building positions on innovation, energy, defense, manufacturing. India has to build a manufacturing hub. So, this is where it looks. So, when you look at this entire space, it's not very difficult to build a 60-70 company portfolio.
Yeah, absolutely. You've given us a plethora of sectors, and then you said innovation, so I can't help but touch upon AI. And globally, we've seen a lot of capital flow to the AI dominated sectors, and India has been left out of that story. It's been to Korea, it's been to the US, of course, majority. Will India catch up?
Yeah, it's a tough call now. We are already way behind. The world has called it out, whether we accept it or not. That we don't belong is a reality, and that's a rude shock to a country which had called out tech much before the world had
Yeah.
done. So, from being tech leaders, almost tech leaders, to trailing the AI business is something which none of us ever thought would happen. But that's the reality. If there was any iota of it, money would have come to India, right? But I don't really rule ourselves out from that frame. I feel we'll be brilliant enablers of that space because we do have the back end.
Okay.
And these adaptation of some of, I don't think all will, but some of them who will adapt quickly because the talent is there. It's just a change of skill. If that happens, some of our companies can do well. But yes, we've missed out on the broad AI structuring part or innovation part. But we will play a very good backend to or enable AI is where I come from. But I have a firm belief that a lot of businesses which are more in the private equity space can surprise us in the next 5-7 years in this space in India.
Okay, that's interesting. So we will adapt. It's a matter of time, but as of now, we're nowhere close to the tech leaders. In
Yeah,
the
but
world. Yeah.
I'm speaking a little ahead of myself.
No, but tell me, we were just chatting off camera about this course that you did in Stanford, and you were talking about how you learnt about AI. What was that like? What were your observations? What were the conversations like? Where?
No, I was just speaking about the whole environment. There was no professor who was not involved in an AI startup
Really?
who came and taught to us. There was no professor. There was nobody in that campus who was not anyway not attached to any AI innovation that was happening. To see that ecosystem was mind-blowing actually.
Yeah.
And then we realized that the gap between tech and AI is serious. And I don't see that ecosystem in India. So it was not sad actually, but to say that so much is happening elsewhere
Yeah.
was a fascination to even be part of.
Yeah, it is absolutely fascinating. Like you said, we were the tech leaders and now trailing a bit behind. But since we're talking about different ecosystems, you, of course, are the first and the only non-Korean leader at Mirae. So congratulations on that. But tell us, because there are those multiple trips, of course, that you have to do with work to Korea. And I'm just curious about how culturally they are different, and more importantly, when it comes to technology, areas of business, how do they operate differently, if you'd like to share?
I think dramatic difference. I think first thing which I'd like to call them out is on hard work. I think they're every Korean is very clear that the country has to grow. Right, every Korean. In the stock market, if one or two companies only perform, there is concern. Why are others not performing? This is at a ground level, right?
Interesting.
They come to office at 8 sharp. You will not have anybody at 8:10.
Oh, wow.
Yeah, and then they go home when they finish their work. Right or wrong, I'm not commenting.
So it could be at 1 p.m., it could be at 10 p.m.
It's when the work finishes.
When the work
right?
finishes.
And
Okay.
see, if you want to grow a country, then you have to work hard. Sometimes, we've had these debates
Yes.
in India.
The 70-hour work week.
Yeah, I mean, if you're happy with 6% growth, so be it. But if you want to grow at 9, 10, 12%, then all of us have to work harder. Is something which I learned from them, and I'm very proud to be seeing that culture. And at Mirae, I said we work very hard.
Yeah.
We won't find anybody with that sutta break or that coffee. Nothing happens. We come, we work
Put your head
hard.
down, you're working.
Yes, yes. Some people come and say, "What is happening? This is not a company which has fun." We have fun, but not during work time.
Okay.
But that's one. At a social level, they're very clear of what they want, and most of them want growth in their lives. No wonder from 1960s, mid 60s, when that country was reduced to the ground post-war. Today they are a per capita 30,000
Yeah.
per capita economy, right? So they have really worked on building that whole space, and very simple yes no people. So work gets very easily done. Decisions are taken on the table. Decisions don't take time. So after 15 years, I am also a Korean.
Absolutely. What about K-pop and K-drama series?
No, I'm a big fan of music, so I buy my vinyl records from Seoul. I'm going, so I'll buy them.
Oh.
I'll give you a very interesting thing. So I bought some records there,
Okay.
and I went up to the counter and said, "What about some K-pop? Can I get some music?" The guy looked at me and very clearly said, "That's not your music. You don't listen." So he refused to sell me K-pop. But at the same time, I have kids of friends who've said one BTS ticket.
Yeah.
There's a friend's
Oof.
daughter
Yeah.
who considers me the master, and she says, "I'm your slave. Just get me
wow.
one ticket." So you cannot not take away the Korean pop culture.
It's real.
The Korean soap culture in India. I have seen some OTT platforms showing Korean soap in Telugu
Yeah.
with English subtitles.
Oh, yeah, it's crazy. I
That's
mean,
how-
I went to an NGO to teach underprivileged children, and you will not believe I asked them about Bollywood, and they said, no, it's all the
Yeah.
K-drama stars. Okay, we're deviating now. I could talk about this for a while, but I want to talk about your views on on investing, and you've maintained very clearly the 70-30 theory. Can you tell us a little bit more about equity and debt, and what is the ideal proportion?
See, that is my proportion. I used to run a 60-40 sort of split between equity and debt. But what happened? Life takes over, and I'm cognizant of inflation, but I'm more cognizant of lifestyle inflation, and then I'm more paranoid about my retirement. So if you have to live in Mumbai, the kind of money that you will need is a lot. So just to sort of accommodate that, and also take into cognizance that you're going to live a little longer than what you had envisaged, then that change in portfolio had to happen. So right now it's 70-30, but what can happen is out of that 30, some more can go into alternates. Because parallelly what's happening is my PF is also growing. So and it will continue to grow. So and my runway to retirement is shorter than what it used to be. So I'm putting my debt part there, and hence increasing my investments to growth assets more than what it was.
And you said something very rightly about retirement, that as you touch 70 and 80, money is your only friend.
Only friend.
And that is so true, whether you want to accept it or not. So tell us why people, even at a younger age, need to take retirement savings seriously.
See, it's the biggest ticking bomb of the country. In any growing economy, and you can check what I'm going to say, is that the sovereign takes care of you in the form of a pension plan. Every country has a structured pension plan. India does not have one. So if India does not have, yes, we're just beginning to see the growth of NPS. But if in the absence of a pension plan, it becomes very important that people recognize the need for a good pension towards the end of their career, or they have to work for the rest of their life. Each to his own. If you want to work for the rest of your life, so be it, and earn. But if you don't want to, at some point of time, physically you will not be able to. And that time, your passive income is what comes to save you. Passive income is what you generate from your savings or investments, whatever you call. If you're not preparing for that, then your old age can become extremely sad. And that's not something which you have built your life for. Sorry, I have to put it on the table as it is, but sooner we discuss it, better.
And so what should be the goal? How much should an average person, say, in the city of Mumbai look to save? Or
I mean, depends on the person
Yeah.
completely. If I put a figure, people get pretty mad at me.
Yeah.
But it's a lot of money. But it depends on the person's lifestyle.
Yeah.
Depends on a lot of it also. I mean, it depends on whether you've inherited a house or not,
Yes.
right?
Of
Because
course. So a
that's a
lot of
big part. A
factors
lot of factors. So
into
you have to
play.
put all that in and form a plan. If you have not put a plan in place, that's a bigger worry.
Okay. And you've also, there's so much happening with gold and gold imports and the Prime Minister's commentary. And you said gold in the locker is of no use. You need to buy digital gold instead. Why?
Yeah, I mean, see, typically gold, I come from the East where gold is part of our life.
Yeah.
Everybody has gold there. I mean, forget the women. We wear a lot of gold. So, men wear a
Yeah.
lot of gold. So, invariably, from a financial plan perspective, if you see traditionally how it used to happen, and it's very fascinating to see, reflect on those subconscious financial plans that were there, that are still there in the country, is that over the years, the parents build up gold for either their daughter or the daughter in law who comes in. Uh, uh, that lies in the locker. Trust me, the young will not use that design that is there in the locker. So if you want to give gold, it's your call. But keep it in the form of digital gold. On the day you want to use it, take the girl to the shop and buy that gold from from that digital gold. I'm not against
Okay.
buying gold, but putting in the locker is worthless. Your locker costs a lot, right? The ETF costs nothing. So hold it in the form of digital gold, and if you want to use it, then give that choice to
Okay.
the lady, right? And
Okay.
then let her choose whether she wants to continue with that ETF or the digital gold, or she wants to buy jewelry, but convert it that day and buy it, because the designs and the jewelry she will wear will have no correlation with
Yeah.
the jewelry that's in the locker.
Okay, fair enough. Now, you started off your journey actually investing at a fairly late stage, and you say that that's one of the regrets that you have. So, say that there's a young person who's taking inspiration from that. He's maybe early 20s and he's saying, I have about 5-10 lakh rupees to invest. Where would you advise him to
No,
invest?
thanks to that statement, a lot of my friends have read it. In fact, the children have read it. So
Yeah.
my friends' children become part of my thing. Oh, go to Swarup, he will talk.
Yeah.
So invariably, we start with 20% of their take-home pay, and we start investing at 20%. I started like that with my son, but at the age of 26, 27, to be fair, he's seen a fair amount of growth in his portfolio, and it's led to a place where now I don't have to ask him. He comes and tells me that there's some money, what can I do? Otherwise he's a very inactive person
Okay.
when it comes to this. But and there's this, and now the apps give you this entire portfolio in front of you.
Absolutely.
So much has happened which now encourages. But once you start and you see this money growing, that becomes a huge incentive for the future.
But I think investors, even when they're looking to invest in mutual funds, they check the funds that are ranked on the apps. And then that's how they go about it. But what should they actually be looking for as a metric?
See, it's a little deeper than that. Let me address that a little wider than the whole thing. If you look at the last 20-25 years of Indian stock market, typically the Nifty 50, which is what the stock market kind of is judged by, has doubled traditionally in 7 or 8 years, right? But then this great, great is not the right word, but we got a definite bottom during COVID, and after that the market kind of rebounded in 3-4 years, and that set a wrong precedent, right? Please understand that's an aberration,
Correct.
and as we speak, 1.5-2 years, we're probably reversing to that earlier mean. So I am putting it out. It's up to time to answer this. Maybe, and it's a big maybe, all data crunching based on the last 3-year data can be wrong, because it's an aberration. So people who are looking at last 1 year, 2 year, 3-year data to form conclusions can go horribly wrong in the next 5. I'm using the word horribly purposefully, right? So a longer term data is probably what people should look at, right?
Okay.
Having said that, India is as a cusp where the next 4 trillion will be built on very different industries. The first trillion was built on different industries. 1, 2, 3, or 4 were built on banking and financials. And when you look at investing for the future, maybe investing in portfolios which look futuristic can help the young more than investments which are in past industries, something. And they are good at inferring what I'm saying.
Yeah.
I am a big fan of their minds, their ability to grasp things ahead of our time.
Yeah.
So if you keep these two pointers in mind, no, portfolio can be very futuristic.
Okay. I hope you're enjoying this episode. Do take just a moment to tune in and subscribe on Spotify, YouTube, or your other favorite podcast platforms. It'll only take a second. Before I get to children and investing, one more question. You've about the risk profile, and it's interesting that you've said that your risk profile changes with the life stage, and I thought that that's so pertinent, right? Like where you are at 20 is so drastically different from your circumstances at the age of 40. So how do people know what is the right investment avenue, or what do they need to keep in mind to know where their asset allocations should go and how much into direct equities, mutual funds, alternates?
You are not born with two things. One is courage, one is risk profile. Yeah. And these are the two things that are needed for investing.
Okay.
Because when you invest for the future. You have to be an optimist to invest. Because if you don't see a brighter tomorrow, you shouldn't be investing. That's point number one. And both these change with life. Investing is a journey of knowing your life. And more you are in touch with yourself, the better your portfolio will be. Knowing yourself meaning what is your want and what is your need. And from your need, form your aspirations. And everybody's aspirations are right. And people should push themselves on their aspirations.
Yeah.
Otherwise, why are you doing this whole thing, right?
Okay.
So when you put that in perspective, it's just continuously asking those questions to yourself which lead to your portfolio. And everybody's risk profile is correct. Everybody's portfolio approach is correct. That's why this term is called personal finance. It is personal, right? So the first thing to do is probably jot down those. And more you write it down, better for you.
Okay.
Right? Then you can revisit it. Okay, I written this down. Where am I? If you see my plan on retirement, it is written down yearly. The withdrawal per month from the age 62 is written down.
Which is?
How much I want.
Yeah,
per
but how
month.
much?
I mean, it depends on my
Okay.
life. It's a
Okay.
personal thing.
Fair.
But it's a fairly lot.
Oh,
If I put that figure,
Yeah.
trust me, people will start shouting.
So it's important to put pen to paper.
It is
also.
written down.
Yeah.
So I will know whether I'm course for that. I will also
Understood.
know whether whatever written down as my withdrawal is correct or not. Suppose by that time my needs change, then maybe the 70-30 will also change.
Okay. Fair.
So everything works together,
Yeah.
right? It's very similar to your health plan, right? Both are very similar. But till you don't write it down, you will not be able to judge yourself, is the point
Okay.
I'm making. The people tend to check the inflation part, but the bigger worry to check, it's not a worry, but it's something to keep in mind is a lifestyle inflation.
Absolutely. You said that that's a real thing, and
That's
we
the
need to be
bigger thing.
cognizant of.
If you
Absolutely.
are on track on what you are using, a
Yeah.
shirt I used to buy at 2,500 rupees earlier is costing me 5,500 today, right? And that's serious upgrade.
Correct.
For the same shirt, I'm not changing my shirt, okay, and not from a large brand also, right? So that's a lot of money,
Correct.
right? So it's I'm just putting one thing in place. You'll look at the cost of tea that you used to be having just 5-7 years ago and think everything.
Correct.
And food inflation and education inflation are serious inflations.
Okay, now I really want to come to this topic and pick your brain about children and financial planning, investing, just basic habits. And if we could talk about it, I read the book by Morgan Housel, and he said it's important to pick your lifestyle very carefully.
Yeah.
And it's important that you don't try to live one lifestyle while you try to inculcate another for your children, because that can also give out very different messaging. Tell me a little bit more about what you believe one should do with young children, little older children. What should be the view?
See, on the topic of children, I read Charlie Chaplin's autobiography very early in my life. And Charlie Chaplin puts it very simply, that children are much smarter than you think. That is why you end up hurting them so much,
Yeah.
right? Children observe and know everything. And if the parent is saying something and walking something else, it has a dramatic psychological impact, right? As a parent, you have to be very cognizant of that. and be truthful at one place, and that is with your children.
Yeah.
And most important, be truthful about money.
Yeah.
I mean, my only rule with my wife is that we can fight on anything, but not money. Because
Okay.
it's the starting point of
Absolutely.
most relationships going bust. And I'm not talking about husband wife, I'm talking about children and parent.
Yeah, and
Right.
you're right that they are observing anything, and actions speak louder than words. If they see you reacting to a purchase that made you very happy, or when you're saying I can't afford that, they are clocking it in. And you said be honest with your children. So at what age do you start explaining to them about saving or money, or when is it too early? When is it the right time?
See, my upbringing was very different. My
Yeah.
upbringing came from an India which didn't have money.
Hmm.
So we had these weird rules that money will spoil a child, right? Because we didn't have.
Yeah.
Huh? That's absurd, if you ask me. Within that, and I'm just calling out a few communities out. If you come to the West, there are enough communities which hand out money to a child from
Yeah.
the beginning.
Yeah.
Those children get to know money and handle money much better than say me.
Yeah.
By virtue of me being in this industry, I started and learning commerce or studying commerce. I
Yeah.
started learning money very late in my life.
Mm-hmm.
But as a result, my simple rule was with my child, whenever he starts early, I will be very transparent about money.
Yeah.
This I'd learned from my I said this in many forums. My parents had told me their entire salary.
Yeah.
I knew how much money was coming in. I used to do the groceries at home, so I knew the outflow.
They were very
also.
transparent
Yeah.
with you. So, did that help? Do you think we need to inculcate those kind of habits at a younger age? Maybe like giving them pocket money or inculcating the habit of saving, and at what stage?
So I'd learned this from Robert Kiyosaki, apart from Morgan, he's another person. And so very early, my first gift to all children was that money game. What were you calling it?
Monopoly.
Monopoly. Yes, yes. Because that teaches you that you buy, sell houses and all that.
Yeah.
It's a gift he had sort of recommended that you give to children. So my only gift to children was Monopoly at that age.
Really?
You start playing. Okay,
Yeah.
you have money and the excitement on the child that he or she is buying a house.
Yeah.
You can mortgage a house.
Yeah.
All those rules come in through that game. So sooner you start better. I mean, it's up to each parent to decide when, but I would put it from day one.
What is day one? Give me an age, approx.
I would start when 5-6 years is too early.
Huh.
Just when they start going to school,
Okay.
maybe a little bit, and ask them a very simple question. Even if they don't tell you, just ask them to just write down where they've spent the money.
Okay, so these are very practical, everyday things that we can start doing. Write down your expenses, play a game of Monopoly, give them a little bit of responsibility. You brought up the fact that you grew up in a different India where they thought that money would spoil you. While things are very different, our children have so much abundance today. There is still that fear of them being spoiled because they've grown up with much more than we did. So how do you draw that fine line between avoiding?
See, as a parent, you have to be secure about it. You have to trust the child.
Okay.
So that's where I say encourage your child to start with, don't tell me where you're spending your money, but tell yourself. How many of us have an income expense statement as we speak? You tell me,
Yeah.
right? Till the time you don't write down where you're spending your money and where you're getting your money from, your financial statement does not start. Sooner you encourage a child to do that. If you're going to tell the child, you have to tell me where you're spending, maybe that mistrust will
Okay.
start.
Okay.
Just inculcate the habit that you
Write
should
down.
know where you're spending your
Okay.
money. I trust you that you'll be spending it the right way, but you should know what you're doing.
Okay.
That's a good start, I feel.
But there's also this thing in this era, and now we are starting to get, at least I'm starting to get guilty of this instant gratification. You see that thing on social media, those pair of shoes and that bag and whatever, and you want it. And with our children, I'd imagine it would be multifold.
Yeah.
How do we deal with that instant gratification urge?
Sooner you accept it, the better.
Oh, don't say that.
You can't stop it, right? And parenting today is very different from
Yeah.
parenting earlier. We were getting hit left, right, and center.
Yeah.
Our teachers could bash
Yeah,
us up.
yeah.
Those things
That's
are
not
a no-go,
happening.
right? I mean, and it's getting very sensitive as we speak. This whole thing of psychology never existed when we were children. Nobody asked us, boss, okay, this has happened. What's your mind talking about it? But in this new world with so much of information around you, the mind is very different, and that's something which one has to accept, right? Science has taught us now that children can be very different, needs can be very different.
No, when you say accept, that means if a 12-year-old is coming to you and saying, I want this, XYZ has that, I want that, where do you draw the
But
line?
that's where one, if the child knows.
Oh, so you're saying the upbringing plays a role
Yes,
from
it's
day
100%.
one,
See,
right?
it's a rule, okay,
Okay.
with my child that, okay, fine, I can afford this,
Okay.
but not at your age.
Okay.
Right? It's very clear.
So you can set those boundaries
Yeah,
from
it's very
day
sad
one.
that, okay, it's not that we can't pay for it, but this is not your age. You earn it and you take it, not an issue. But your time will come. It's a very simple thing. Suppose you're going to a hotel, right? And I tell my son that I've slogged.
And your son's 26.
26.
Yeah.
Okay, this is the kind of room I'll stay, but you are earning this much. This is your room.
Really?
You want to upgrade, you pay and take that money. Not an issue.
Okay.
Not an
so
issue.
None. Okay. So you tell them what you can afford.
Yeah, so
That's the way you're doing it.
if we are going on a holiday to a certain place and I'm paying for it, then if there is normally there is no differentiation.
Yes.
But nowadays, trust me when I say this, the costs are climbing to a level where if we have to do a family holiday together, that differentiation has to happen to make that within that budget, right? So we've set boundaries and he's quite okay with it. See, these children are pretty chilled about all these things.
Yeah.
They're not bothered.
That's
They're
good.
more bothered. See, it is a fact that they're going to change assets to experiences.
Yeah.
They're more bothered about the experience than
Okay.
what we are. See, we didn't have so many things, right? For us, some things which are aspirations are probably okay for them.
Yeah. Okay.
Okay, so but it is very clear to also set some basic rules that at your age, this is what you are entitled to,
Yeah.
and this is what you are not. Forget about what money we have, because the money we have is for my retirement, and I am not dependent on you for my retirement.
Okay.
Okay,
So
I'm
you
not-
set those boundaries.
Yes, it's
Yeah.
about money, and that's something. See, I firmly believe, and because I handle money, and this is the bitter truth about money, relationships break 99% on money. So if you set it out clearly that these are do's and don'ts about money, rest we can all bargain, we can fight, we can do anything. But on money, there are set rules in my house.
Which are what? Can you give me just examples so people understand? What are the set rules that you're laying down with your child?
I mean, if we go to a restaurant, we'll go to these restaurants.
Okay.
Okay. Together, there is that much money. It's not about having money or
No.
not having. Please keep that
Yes.
aside.
Yes.
I should not be spending that kind of money for a dinner,
Okay.
right? If that's the boundary, then he can come and tell me, Dad, I want to go to that place. You're earning, you can go there.
Okay. So you can do what you want with your money.
Yeah, he's earning, so it's his money. I don't interfere in that. As long as he's taking out 20% and investing rest, he's free to do whatever he wants.
So was that a rule also, like a non-negotiable, that 20% has to go in?
Yes,
in
at the beginning.
investing.
But now, like I said, now it's he's doing it on his own.
Yeah. Because the habit's been inculcated.
Because he's
He's
seen.
reaping the rewards.
Yeah, the other day I saw him telling his friends. I was pretty shocked because otherwise he's very, very. I think he's bad at money. Is every parent, my parent also, my
Yeah.
parents also thought that. But he was telling his friends that we need to front end investments so that we can compound and later on. I found that to be shocking. What is he saying?
Yeah.
But it's got nothing.
Yeah.
I haven't told him that.
Yeah.
But since he's seen his corpus build a little, maybe he's got excited with that.
Okay. So just inculcating a healthy habit about money, about saving, you need to do this from day one. And how do you do it?
I think, see, what happens, and I've come from that background.
Yeah.
Initially, when you don't have money, admitting you don't have money is a big thing.
Yeah.
There's no shame in admitting that, right? And then you're underestimating your child's ability to not understand it,
Yeah.
right? Don't make that mistake.
Okay.
Be absolutely transparent with what you have. And trust me, your child will. I can give you n number of examples of how I have, because I'm a money guy. I mean, money
Yeah.
guy meaning money behavior guy.
Correct.
There was this friend of mine who was finding it very difficult to tell his child that he had sold, and he had forbidden me to tell him. He'd actually sold his house to provide for his foreign education. right? And he told me, don't tell him. He's my childhood friend.
Correct.
And we were sitting for dinner. I told the child that, do you know that they've sold your house? They were furious at me. They didn't speak to me for a long time. This kid went to the US and within 3 months called the parents, said that I've got a job in my library. Dad, you don't need to send me this much. And that day he called me and I said, why did you underestimate your child?
Yeah.
But it's you have to be transparent. The
Give
child
them
should
the hard
know
truth.
that this is what is the truth.
Yeah.
And then, for heaven's sake, respect their brain. They are extremely, extremely sharp.
Yeah. Absolutely. They are with the access, the information, the technology.
Don't underestimate them.
Yeah. But you've also said that the Gen Z now that you cater to as clients also, traditional investments is not the only thing that they're going for. They have a different mindset. What are they going for? What should they go for?
See, their thought process is different. They will be more in that innovation space than our traditional space.
Yes.
And if you don't cater to them, they will go somewhere else. One of the largest trading lots in Bitcoin now are Indians.
Yeah.
Right? That's the truth.
Yes.
Right? That's their risk profile. If you don't cater products to their risk profile, sooner or later they will hunt for their own products, right? And that necessarily need not be a diversified equity fund. The diversified equity fund was good for us, but they will probably be more involved in futuristic products, like I said. Innovation, maybe energy will spell out more for them. EVs will sound more attractive to them than it did to us. If we explain a little bit about, say, defense, they will take it up far more than we did.
Okay.
I suspect they will be more thematic investing in nature, like the rest of the world, than market cap investors that we are.
Okay.
That will be the differentiator. And they'll be quicker to catch into new themes disruptive themes than we were.
So given that you're saying that Bitcoin, I mean, it is big and Indians are using it as a form of investment, what are you telling the Gen? Are you saying steer clear? Are you saying
I'm nobody to say that. It's their call completely. I have to go in and put a product which will attract them.
Okay.
They have a mind of their own. And so I respect that mind.
Okay.
My endeavor will be to put products which will attract them rather than tell them with something which is wrong, because everything I thought was wrong has turned out to be right. So the hard process of unlearning that has happened, see, it's simple thing. Aman, correct me if I'm wrong. If I would have said equity is a growth asset class, I would have been correct.
Yeah.
What did I say? With all my wisdom, equity is the only growth asset class. With gold outperforming equity on a long-term horizon, everything I've said is wrong.
Yeah.
So I have learned my lesson very, very bitterly. And I've learned the only way to invest is to broaden your investment assets. And if they have understood that this is their way of investing, maybe they know better than me. So my job will be to probably cater to their aspiration of investing than to tell them what is right or wrong.
Okay, and if I were to sort of make it for a set of parents who say have just had a child or whose child is under the age of 10, what should they be looking at in terms of investment products to invest in? Some government schemes maybe for girl child, index funds, mutual funds, what's ideal?
Yeah, I think the government girl plan is a definite thing. If my younger days, I would have taken the PF more seriously. I would have is sovereign at that level, take that rate. I mean, that can be the debt part of the portfolio. But on the equity part, at that age, I would put a 30-30-30 sort of breakup. I would say 30% in commodities and all in the digital form, nothing in the physical form. Out of 30% in the core asset, I would break it up into 15% of large companies and 15% in mid and small.
Okay.
And the balance 30, I would definitely look at futuristic themes which I'd put.
So like alternates and...
Alternates too early because the money might be a little less. The thresholds there are a little...
So futuristic themes?
Like, say, EV manufacturing, because India manufacturing is just about starting. Defense is a long-term process. Maybe healthcare a bit. So more thematic than market cap. 30-30-30.
Okay.
And 10 is up to them. But 30-30-30 definite.
Okay, it's so interesting. I've written down notes all over, very useful as to how we should deal with children, money, finances, and investing. And I'm sure that there are a lot of key takeaways, especially the one being be truthful with your children about your finances. A quick rapid fire before we let you go. One theme that you're most bullish on, if you had to nail it down for the next decade.
Yesterday, today, tomorrow, healthcare. That's my core theme.
Okay. One investment mistake that Indians are still making.
Still focused on market cap investing. They're missing out some incredible ideas on the thematic side.
Okay. One thing that Gen Z has understood better than our generation about investing, and they've got it right.
I think they're starting much earlier than we did.
Okay. One financial habit that you think everyone in their 20s needs to start off?
Think more of how much you have invested than what is the value.
Okay. And if the market corrected, say 30% tomorrow, what would you do personally?
I'll buy more equity.
Okay.
It's time for Indian equity.
Okay. It's been wonderful interacting with you, Swarup. Thank you so very much for your very insightful takeaways.
Thank you so much. It's been such a wonderful discussion. The first time I did children, it's something which is very close to my heart. So thank you so much for that.
Exactly. Let's hope that that part of the interview really does well. So many key takeaways in this interview. First up, when it comes to the market, Swarup did acknowledge that while the war may end, the impact of the war is going to be long lasting. But India, of course, is like the mango story. We are fairly insulated from a lot of these global events. Banking and fintech, consumption, healthcare is a huge theme, energy transition, as well as defense and manufacturing are some of the sectors that he's looking at. Lifestyle inflation, as he said, is very real. Retirement is the biggest time bomb, and you need to start investing at an early age. Your risk profile changes as your life stage increases, but it's important to broaden your overall investment base. When it comes to children and saving, children are definitely smart, and you need to acknowledge that. They need to see you walk the talk and watch what you are doing every minute. Be truthful about money. Do not underestimate how smart they are. Make them start managing money at a young age. Have conversations, have them write it down, even play a game of Monopoly. And instant gratification is something that you need to come to accept. Do try to scale their investments in 30% commodities, 30% in equities, and 30% in futuristic themes, and set boundaries at a young age. I really enjoyed this episode with Swarup, and I hope you did too. Do remember to like, share, comment. We'd love to hear from you. And until next time, thank you so much for watching.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.